Usually it's a bit less, but anyway, this is my trading on, the one I trade with.
Yeah.
Then I don't have any other window open. It's just that project, like topest, what it calls, Twitter. So I'll just close that part. Now, if I click on this one, it will give me another one right now. Yeah. This is the other one. So this one, I change the layout to my higher time frame. When I change it to the higher time frame, this is that BPR is still over there. But anyway, it doesn't matter. When I change it to the higher time frame, that's when I put it here. So if you look, sorry, that's when I put like this way. So more space. But thing is, my other one is still running, and I can take it from here and I can put it to my other screen. So now if I share my other screen, time you, because change the stream, entire screen. This is the screen 2. So screen 2 is now showing like this. So on this area, I keep it like this, full screen. So I see more charts, 5 minutes, 15 minutes, all is on my right side on the other screen. Okay, so most of the time when I share my chart, you see like this, okay, just this layout, because that's the window I share.
Right. Yeah. Okay, cool. I'll have
Yeah. Tell me. Yeah. Yeah. Okay. That thing, I think you are not. Can you share your chart? Okay, let me show you from here. Someone correct, I think Simba or someone corrected me as well, because let's say this is a buy long. On the setting, this lot size, you have to change it to 2. If you change it to 2, then it will show the correct. So go to the inputs, change this lot size to 2. And maybe make a template. For example, I have a template like 1:2 template. So if you save a template, this is your 1:2, and this lot size, you have to have it as 2. Then it will show you how many contracts you have to take. For example, if I'm taking the entry here, then this is 6.25 contract. So I can take either 6 or, yeah, like 6 is a close on to that risk limit, or maybe 7, whatever it is, like around that 6 or 7. So it will show here. First, you have to make it 2 for buy, for sell, both of them. Got it? So then it will show you the quantity over here, that exact quantity, that way. Yes, no worries. Okay, I think market is closed. We are done. I'm very happy to see that it didn't tap into that 2020 level. Just I'm upset that the level will be traded during Asia. Okay, Monday. Why is down here? I think, oh, okay, it's the higher time frame, so I didn't change it over here. Okay, that was the high. Yeah, that was taken, came back, went here. So I don't need it anymore. Yeah, so now that's the upsetting part, that this market will go and take that high as using this. After taking that high, if it can invert this 15-minute bullish continuation, I'm looking for a sell short until these lows. See, that sell side is still marked. That's why. Anyway, not, let's see. Like I'm not bearish in the market by any. My overall direction is here, and it's very close to that. Thus, this is the area, especially this is the area, the mid of that daily breakaway gap. Let me check one more time if it's the daily or if it's the, oh, okay. So I draw the 4. The daily is literally from here, this side. And that's the buy side I'm talking about on 4 hours. This swing high is where market, this is where the daily starts, breakaway gap starts from that high. So that's the 22,020.25 or 50, something like that. From here, daily bearish fair value starts, breakaway gap. Higher time frame. My higher time frame had like 4 hours. I had only these 3 levels. Bullish fair value, bullish breakaway gap, bearish. Traded the bullish fair value, going for the bearish fair. That's why I said I'm bullish until a certain level, I'm bearish. When that fall happened, this is how far I was bearish. When it going higher, this is how far I'm bullish, but not this high. I'm bullish until that liquidity. So around that mid area. Let's see. Daily is looking beautiful. Daily is like charm. So far, the way it has traded from that bottom. Fair value inverted. Used it. However, you are looking at it, because you think your stop loss is below this candle's low or below this level. It's going higher still. Bullish fair value created on that daily new eco tapped perfectly, going higher. After tapping here, this was the traded. Going higher. After trading this continuation, this was the next continuation. Traded, going higher. After trading this continuation, this was on continuation. Without trading it, it created another continuation there. It was trading it, respecting it. Finally, one candle closed below, traded the lower. Next day, closed above. This is the one I was talking about. Next day, closed above, reclaimed the fair value, going higher. The same scenario, after trading this lower fair value, we have a various trading the continuation, respecting it, going higher. With this scenario repeated over here again, which is one candle closed below, very next candle closed up. It's going higher now. Yeah, maybe fair value gap, inside of that some liquidity taken, lowest down close acting as your block, order block. 25% traded, mean threshold was not traded. That's even better. That's a good sign of the market. After order block, propulsion block created. Propulsion block, usually the lowest one that is traded here. Let's simple like this way. Mean threshold traded, going higher. Looking for a bullish fair value that may remain unfilled. Now, so far the movement is not too big. The fair value may not be yet created, but even let's say if it's a, I'm looking for the daily bearish one to get violated, and using this as a inversion, market go for those all-time high. So this fair value gap I want to see. All this time, if you look at the market, these structures, I will show you exactly how it looks. I don't need those lower ones anymore, so I'm gonna remove them. I already showed the lower projection, how that, and higher my expectation is around like 23,000 or 4,000. It's on my other layout on Blue Guardian on 7.5 level, closed above, came back, revisited, fair value gap close to that level or even that in traded at 0.5 level, right at this level. This is where you had the fair value gap, traded, going higher. 7.5 level, 25%. Look at that. Yeah, this is the next. These things is giving us hard time, but it's not stopping the market. Okay, why I prefer buy longs over sell? Before I go, let me show it one last time. Monthly candle, okay? Just to show, since here on Project X, we have the since 2000, what is the direction of the market? How it's going higher, like low created, high created, higher low, higher high, then higher low created, now higher high is getting. Okay, on the monthly. Imbalances, I have already talked about it, but just for the sake of the understanding. Imbalances, and I will show you exactly where this imbalance is. From this low until that high. Let me remove that other grid. See that? Below 50, that was your premium array, discount array. Traded, going higher. When it's going higher, what can you see over here? Monthly fair value already got inversed. It has taken liquidities, traded, rebalance, imbalance. Monthly bearish fair value got broken already. So why are you looking at bearish legs? Same scenario on the weekly. When it was going higher from this retracement below 50% the retracement. Weekly bearish fair value got broken right here. That's the only weekly bearish fair value. There is no other. So the continuation is still that fair value. Got broken. This can be the retest since we have some volume imbalance up over there. If you include that volume imbalance, where was the previous week trading or the other levels? Okay. Now what you are looking at? Weekly bearish fair value gap. Closed above 50. Where is it right now? So what are you thinking? Like, where is this market heading for? So any sell short or any reason doesn't matter. Frame your bullish setup once the setup is presented. Be bullish. Don't be bearish. Be bullish. And that whole range, again, from this low until that, this is not my projected terminus. My projected terminus is like the close proximate is here. Perfect alignment or better alignment is 10,000 want to go and time high, but it's not impossible. You can even take this one standard on something. Let me check. I do it like this way. This is okay. This one and this one, 25,300. So new all-time high should go until, okay. It will not show here. I will bring it back. No worries. And the lower one is looking like this. Okay. Let me remove that one. See that? Perfect overlap. Where was the low font? Okay. So yeah, that's how it works. Okay. Market maker model. That's how it works. What you're looking at is weekly accumulation, manipulation, now the distribution. Because it is the distribution on weekly, you don't want to go for your fair value gaps anywhere below 4 hours. That projected terminus, let me bring it back from my. Okay, that's okay. Here. See that projected terminus, the grid will be like this. Now you're looking at 0, or let me do the grid. That 75%, that retracement, that 50%, that retrace after closing above, okay? after closing above, retraced into 75, higher, overlapping with this on what I said, like 4 hours or daily. That's the lowest you want to use as your high time frame, because this is okay. For a market maker model, you need 3 time frames. One is your time frame that you are framing it. So here in this case, I'm framing it from a weekly time frame. The second time frame that you need is your mid time frame, where you will be stages of the delivery, how it is delivering the stages. First stage of accumulation, first stage of second stage of reaccumulation, third, yeah, and then the distribution. It will happen in same stages. So first stage of distribution, a retracement, some sell side will be taken, then the new move will start. Second stage done, same. After the second stage of second delivery, after the stage, I will show you. So you here, since it's weekly is my time consolidation, my mid time frame where I'm gonna look has to be either daily or 4 hours is the like maximum I can get down, because if daily is not clear, I will be looking at 4, but that's it. I'm not looking for 1 hour anymore. 1 hour is intraday trading, like same day when I'm looking for the higher direction, higher time frame direction, it's only the daily or 4 hours. Okay, so this is that. Now in your execution time frame, so this is the stages. Okay, I will write it ST, and this is your execution time frame. Since you are looking at your daily and 4 hours as your stages, your execution can be 1 hour and now it looks very higher time frame, right? 1 hour time frame, 15 minutes time frame, but I am making things together. Let me show you that part. So this is that weekly chart. I'm gonna go from here to the daily using those grid levels. And here I will show you either the 1 hour or let's say I don't need the left side, so I will just keep it like this way. Here 1 hour. No, I will put 4 hours here and I will put 15 minutes on the left. Lots of things I don't want to remove at like without looking at it properly. At 75% level, what do you have? You have a inversion, overlapping or close proximate, okay? Or you can look into that down close, lowest down close candle as your order block. So 75%. Okay, first come from the top. Accumulation, manipulation. This is the area where the reaccumulation traded into bearish fair value created a high over. So you will see how it looks on the 4 hours. So let me go here, 4 hours. Okay, all those accumulation happening over here. Consolidation, exact equal highs, relative here as here. Then another one here, another one here. It's like consolidation. See, like all the bodies around the then relative equal lows. This is another consolidation happened around the same area. Okay, these areas you will see the similar price action here. See this? This is the area I'm talking about. Let me make it visible on the 4 hours. These are the areas I was talking about. Remember? Look how far it traded. At what level you saw that market is finding it hard? Look, all the bodies until this happened. When it happened, look where it is trading. Okay, 50%. Once it closed above, it will come lower, take some liquidity. That liquidity is here. Okay, now let me show the same area from your 4 hours. Can you see anything? Okay. Why this happened here? Let's look on the left. See this? This was another stage of reaccumulation. So market went higher, didn't take the liquidity, but some liquidity is here it was taken, but I'm saying it went higher into a no man's land. Then it fall. That's a accumulation happening. Once market went above that, what can you see? Which area this market used to go higher? Okay. Big range, you don't have to draw the whole thing. You see, this is a 4 hours chart and we have the highest up close candles over here, 2 up close candles. Just draw those two. This is called your accumulation block. When it was accumulating over here on the distribution of the cycle, that's where you will have your high. What can you see? Understand, okay? Overlapping PD array. High probability. Same thing. This is the area. Remember I marked. So let me make that area a bit better from the 4. Oh, come on. Why it left like that way, man? Why all the drawing left like that? I think the market is closed. Now it's gonna give some shit me. I was looking at these areas, right? So let me look into the up close candles, highest ones. Swing high created with these two candles, those two. Let's look on the right. Overlapping these. Here was your 4 hour bullish fair value gap. Anything similar? That I showed around this area? It just moved on the left. I don't know why. See, every time I'm scrolling, it's moving left. But, oh, come on. What the actual fork is going on over here? You got the idea, right? I'm already showing you there. But now, same thing. Okay, 25% overlapping. Let me is visible. Then why it's there? Oh man, project fucking X. Anyway, you are getting the idea. 25% level is this level. See that my mouse pointer? Let me put a line over here. 25% area. Overlapping fair value gap right here. Within that range. Using that, market is going higher. Now you saw that happened on the left. Look for your answers on the left. These areas. Still not broken yet. This high is not taken yet. Once it will take, this is going to be your next area of high probability fair value. It's still within that area. Once it breaks that, this is where you will get your high probability fair value. Maybe, yeah, what can happen? It consolidated a little bit, created more fair value gaps here and here. There is a fair value, inversion fair value. That one also traded, by the way. This whole move started after trading this inversion. So maybe after trading above this area, if it doesn't create any 4 hour fair value, I'm to because the market is closing in literally 10-20 minutes. So there is no possibility of bullish fair. So what can happen? It can come back after that daily breakaway gap trade. It can come back, clear these lows, trade into this imbalance one more time, maybe fill it up completely. Then again the bullish move. On that move, your high probability fair value will overlap. So far, I don't have any here, but that is incoming. Now, how you can use this? Okay, the same grid level. See that 25%. This is the 25% on the 15 minutes. At 25%, do you have any fair value gap over? That's your entry fair value. That's the fair value it's trading going higher. And that's why on 9:30, the buy long I took, I was that confident about that buy long. Remember, I shared a photo in the chat around 9:30, the first entry that I framed and took using this only for this and that level. What is this level, by the way? Oh, it's not showing over here. Anyway, I will show you from here. No worries. Okay, about here. This level, this. Is that same level? Not showing. No, no. This one. This was that hourly possible order block, change in state candle. Market came there, struggled, came lower, traded the bullish fair value, went above, came back to that same 15-minute bullish fair value. Then this move happened. Why this fair value was so significant or important? 25% overlapping. And the final stage, usually it should be very volatile. Yeah. What can happen is, after trading here, it can come back for these liquidities, rebalance the rest of the imbalance, then that volatile move. And maybe this week can be the week also. I would but the best, like I'm expecting the next week will be the week. The reason is the federal fund rate cut gonna happen next week. So using that news and that FOMC press conference, market gonna shoot for that high. But all those overlaps, all those things. Oh, 50% area, okay. Here, 15 minutes. Perfect overlapping. That was the initial delivery, then market retraced, then finished here, then this is the next day opened over here. That was there. Yeah, but this is that overlapping fair value of grid or this 75%, like the lower one. Anything? Oh no. Oh no. And look at the same signature, by the way. 75% fair value traded, market gave us significant move. Okay, this is not a literally like 211 handles, the low to high. Not even the low to high. I should mark from the low to high. This is 226 handle move already here. More than enough for us to make the profit. After that, when market closed over here, opened all the like huge gap. 50%, exact same thing. Traded, oh sorry, here. Where is it? Here. Traded, first thing, 50%, expect another consolidation. This is the area where market consolidation. When it was coming lower, if you look at that same area, you're looking at that same thing on the left as well. Yeah, and you will see after closing below 50, it went higher, took some buy side liquidity, then it falls. The same thing on the bullish leg. Where is it? Consolidated, closed above, consolidated, took some liquidity. It's better on the 4 hours because it's a weekly thing. Took these liquidities, then that move. And in this move, this was that overlapping fair value. Traded, went higher, finished the day around this. The next day opened like this way. Huge gap. 75% or last 25% closed above. You can see it came back, took some liquidity, more liquidity still there. I was expecting this low to be taken out so that the fair value gap trade happens, but didn't do that. But if you look at these areas, when that after closing above, overlapping that same 25%, you had a bearish fair value gap for that sell short overlapping, traded by a tick with that volume imbalance, but whatever, traded overlapping fair value. On the right side, stopped right at that level, failed to close above, came back, retraced, consolidated, took that liquidity, failing to close that level, finally closed above. After closing above, that same area, send it higher. Yes, Trump presented some shit can happen, but look, that same 25%, okay? Bearish overlapping fair value using that. Then when it was going higher, that area, overlapping bullish fair value gap. This was the news, I think, but whatever it's a huge move as well. Using this one, that was the move. Then this time, 25% overlapping. Using this, went higher, took the liquidity. Again, 25% close proximators that one. See, still I have some lines over here. So close proximators this one. There is no other fair value here. So that was the bearish close. Traded, came lower, took this liquidity, then went higher. Same 25% overlapping, traded, going higher. Yeah. Same fair value traded, going higher. It didn't close below that 25 and below these areas there is no 25 fair value bearish, so I'm not looking into the bearish fair value. Traded the same bullish, it never broke anymore. Market is now here. This is the continuation. I'm keeping an eye. Maybe, okay, this is a maybe because this is a daily breakout sitting at the extreme premium. It might have some reactions. CPI trading here, it can come lower. Since this new leg has generated liquidities here, or this is the whole area is like very messy and reaccumulation type thing. I'm expecting that accumulation, lower manipulation, higher that thing. And maybe for this weekly fair value, that like it can send it pretty low, but I don't think it will come all the way back. It doesn't, like monthly candle doesn't suggest me that it should come until this far. But if it comes, no problem. Bullish weekly fair value gap is presented here, and bullish weekly breakaway gap is left untouched way down here. Bullish breakaway and bullish continuation. By the what the hell is this one? Okay. Fair value, bullish continuation, bullish breakaway. But the way it is looking this week, I'm thinking it's going. Okay. Who like at this stage, if this week can break this last fair value gap, when weekly is getting broken, monthly getting daily should reverse the market? I don't think so. It should not reverse. This can be the target later. Not here. Oh, sorry. What I'm showing. I forgot that I'm on the weekly. This fair value gap can be the target later after creating all-time high, reaching close to this projected terminus area, like this way. Then, yeah, you can grid like this as well, since this is your buy side. And you will still see the same thing at fair value 25% PDRS hourly 4 hours. Same thing. 25 this, 50% this, 75% same. Order block, fair value inverted, retest, boom. So when you are in synchronize with the market, you will be looking for this type of thing. And this is the thing that I want to keep on my chart. Because what it is telling me is that this level also showing me good things, this level also showing me good things. So it's telling me that it's going higher. 50% overlapping based on this. That weekly fair value. Come on. Let it capture here. Measuring gap on a standard deviation. See that? Okay. What I'm doing right now. Let me do it one more time. Here. This is the initial consolidation, and that is the initial target. Yeah. From this low until that level, this is a grid. This is a level where you will see a OTG retracement later somewhere in around maybe next year, maybe end of like around this year, that retracement. The thing is, see that 50% overlapping bullish fair value gap on the, let me go to the weekly sheet. 50% overlapping bullish fair value. This is called your measuring gap at 50. What this gap tells you is from this low until these gaps, either the low or the middle, any of those three levels, if you measure one standard deviation, it should overlap with your buy side liquidity. I have drawn until that high of the gap. If I'm looking at the low of the gap, look, one standard and the buy side of all time high is same level. This is telling me no matter what market going, how, when, I don't know, but it gonna go for that buy side. I don't know means I know, but I can assume, okay, let's say from that daily breakaway gap that it's gonna hit today or tomorrow, it is falling. How far it will fall, you think? Maybe from until this fair value. That's my, still this is my weekly continuation. It didn't trade yet. So if it comes here, I'm like from there I can be bearish until fair value. After trading here, what I'm looking at, next move for that all-time high. It's even better. What is it? Why it's better? Because I have seen a big move. I captured every day a portion of the move. When it's coming lower to this fair value gap, it's giving me again more area to trade with, more opportunities to trade with. So I'm looking at it even better. Best case of scenario, weekly candle tomorrow using the CPI, and the day after CPI tomorrow and PPI tomorrow, like rate for back to those 2 days, this weekly candle expanding higher. And next week we are looking at that all-time high. It's not too far, man. How far it has reached so far? It's not too far. It's like 659 handle. How is today's delivery looking like? I'm not from the opening. Okay, low, I don't need it. But from the opening, 200 handles already. From the low to this high, this is nearly 300 handle, and we are like 600 handle far from the all-time high. So it's like 2 more days. 2 or 3 days maximum it can reach there, but yeah, no, it will not. It will reach next week using the federal fund rate. This week is very crucial. This week is very crucial. All I want to see is it's giving me enough room to create that continuation fair value around this, so that after reaching for this level or around these areas, when market will fall, that will be our next higher time frame. Okay, at all time high, you only look into buy longs. Listen, this market, if you just look into buy longs, just know your higher time frame, know your daily dealing range. If you know that, you can wait for your buy long setup every day, and just when it happens, you participate, look for your profit, get out of the market, close the chart. Rest of the day, you don't. Like me, New York, like most of the profit I made in London, AM session, I waited to see some trades. First trade I took, it was a good one. Second trade was not delivering the way I'm expecting, so I closed it in profit rather than letting it hit my stop loss. If I held it, it could have hit my stop loss on the very, like, with went like this. All these fall. That happened right after I closed my trade. Here. That 10, 10, 10. Where is the 10, 10? 10, 10 bullish fair value. This one maybe. Yeah. This 10, 10 bullish fair value gap was holding the market like this. The target was this high. It came close, fall. Again went another, like it created another higher high, close to that high, fall. Again came here, created another higher high, close to that level, falling. When it fall, it broke below this one. It took some sell side liquidity from here. Okay, and at this area, we had that 15-minute continuation still. This is hourly, so 15 minutes. This one. This 10-10 area, okay? At the right place. Where is it? Just a second. This area. Yeah, so that one. This one. 10-10 area. Here. Oh, got it. This slows down close candle. This blue line. When it traded this level, took some liquidity. Why that lowest down close, I will tell you. Don't worry. It's like fair value gap, retracement into the fair value, lowest down. If you're looking at this leg, then there is a liquidity graph. This is your order block. This candle traded into the order block, turned into your propulsion block. Or let's say next order block. Keep things simple. Trading it, going higher. Came back, traded it, went higher. It was reacting from that level. This is that level. It took some sell side, one fair value, bearish broken. So let me keep this fair value aside for a while. This was that inversion fair value gap. With that, it created a bullish fair value here as well. This was the entry. I took that entry. Why? Okay, why I took that entry? Also important. 1050 to 1110. This is only for liquidities. See, there is no imbalance at this level. No imbalance here. Low, 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 low. Took liquidity. Inversion happened. Inversion entry went higher. Created equal highs. But the moment it broke after trading this fair value, this is where the moment it broke it, my entry I got around market execution. When this candle traded into the fair value, I pressed my button, I got around this. So when it, even if you got at the top, I'm gonna show you that. This was your stop loss. Third candle. 1, 2, 3. Third candle slow is your stop loss. Market came very close to it before stopping you out. When it broke this fair value gap, I exited. I didn't even look into which candle I exited. Right on this retest. Check the photos are still in the chat. Exited in a small profit. Okay. People who took the entry, let's say from the top here. People who took the entry from top of the fair value, still they got their opportunity before getting a stop out to exit out here. And this is looking at 3.75 handle profit. I don't care. Okay, handle is not the part over here. Amount is not the part over here. You got opportunity to exit in break even without taking the loss. This move using the same inversion went higher. Macro, right? Took liquidity immediately after. When it's taking this long to do the obvious thing, that's when you look into when it take এইগুলা এই জায়গা দিস না ভাইয়া Starlink I will look after it on other place anyway. When it takes too long to do the obvious thing, why this? Let me show you that as well. I'm doing it on, okay, let just from the previous, just 1 minute, forget about like just in 1 minute. This accumulation happened, high created, relative equal high created, and 930 move made this liquidity even stronger. Okay, 930, this candle, this is the 930 candle. It came lower, took the sell side liquidity, traded into 1 minute. I'm showing just 1 minute time frame. Okay, this inversion fair value gap, because when it got inverted, it never traded that, so it inverted that fair value gap, traded into that. Again, it's a big fair value. You can do it like grid. Forget about grading, just keep an eye. Traded into this area, cleared all these liquidities. So sell side liquidities got taken. This move, this is 930, okay, has taken what? All the buy side liquidity. So sell side taken, buy side taken. This low to this high turns into your dealing range. Dealing range created, OTZ 6279, and you can put the 7 on as well, that's up to you. So 627 on 79. Let me trail it a little bit towards that. This was the retracement into the OTZ. What do I have over here? Liquidity taken, inversion fair value. Luckily, this inversion is your first gap. Okay. This low, until this low is taken, no sell short is valid. That's why I'm taking like this is protected anyway. So this low, until it's taken, no sell short is retracement, and you have the bullish fair value as well. So it has rebalanced all the bullish PDR as well. So bullish fair value, overlapping bearish inversion. Balance price range. Body should not close below the midpoint. Didn't close even. Finally that happened. I'm coming there as well, but that move already has taken this low. So I'm gonna come here one after another. OTZ retraced, market went higher, took the buy side. From this low to this high, this is how it's looking, the retracement. OTZ, it should go for that high again until this low is taken valid. Okay, silver bullet started 10 a.m. 4 hours first fair value gap formed. It's finding it hard to go for that buy side. This was the buy side now for the market. Coming to the OTZ, going higher, coming to the OTZ, going higher. All this time, here, 50%, right below 50% every time it's dipping, going higher. Finally, that was my this was my setup during a macro using an inversion. It's taking too long already. So it's telling me that it's not going for the obvious level now because it wants to go lower. Okay. This fair value gap broken, went through it, no problem. First, like 4 hours fair value. Finally, after taking that exact equal high over this exact equal high, it's telling me it's not willing to go, right? Exact equal high. But here is a thing. All this time, like this high, this high, this high, there was your bearish inversion as well. And inside of that same macro, remember the same macro, 50 to 10. Oh, sorry, this is yeah. This was that inversion on the bearish, because this high has taken this liquidity, and that was the traded that area. Okay, how was your entry looking like this whole time? Like this. Also, I mentioned about one specific thing. I don't want to talk about it, but just for the sake of understanding, 1030 to 1042. This market will give you an order. Using that order block, it will go within this area. First, this was one, but okay, that happened actually at 1046. So I'm just gonna ignore that. It happened at 1046, usually within this area, but 1046 had that order block that has taken liquidity. So that order block was getting traded over. Like, yeah. But anyway, doesn't matter. You have that bearish inversion. Your stop loss has to be above this candle's high. That market never broke. So that's the stop loss. But here is the thing. Yeah, I know it has been doing a lot of here and there, but this fair value gap is not something that you ignore at all. Close below, went to that inversion, came back, overlapping fair value gap formed, traded, continued lower, no entry given. For a lot of people, no entry given. What happened on this leg is, see that balance price range? How far is the balance price range? It's this first presented gap area. Like this area is your balance price midpoint. Remember what I said, until this low is taken, no sell short should be valid. That candle took that low. Very next candle opened, balance price range. Both side can be used. Where did it traded and continued? Once this low is taken, market closed below the balance price. Very next candle, open trade, then this was the fall. Okay. When it was going higher, closed above the balance price range. Very next candle, where did it traded? Then boom. Okay. Big fair value gap, greed it. Once it's closed above the 50%, that's already a red signal. Boom. That 10 a.m. 4-hour candle open, first fair value gap. This is the first fair value after 4-hour candle open. 10 a.m. is a 4-hour candle open all the way to this. This was the first fair value. Okay, and where is the target? This first target, and whatever you can target next. That's that area. See this same fair value gap. Okay, first presented gap. Traded. Did anybody close below the mid? Because this is a balance price range, remember the whole time. No? Okay. That big fair value gap that it broke. 25% upper quadrant. Used it. Then this is a big fair value, but here I showed you it here. See this reaction. When market below that, this and this reaction. When market above that, this reaction. And inside of what? From one silver bullet, inside of 4-hour first gap. 2 a.m. is your next 4-hour candle. This was your 4 hours first gap. That, okay. Told you to grid big fair values. Grid 25%, then that delivery. And your target this time, I told you guys to take a partial. Where was that one? Here. Take a partial here and then hold the rest until partial here, because market never traded value. So I don't know, or we what this fair value will show us. One candle closed above the midpoint. Now I know this fair value is going to be used as a inverse. No rejection here, but the very next candle. Okay. Closed here, opened at that level. Where is it tapping and going or trading and going higher? This move has traded until this far. If you look on the left as well, you have some volume imbalance. You can include that, no problem. But including that volume imbalance, I'm not looking for answers in every. Forget. Bearish fair value, overlapping balance price range. If it wants, market can trade here. If it doesn't want, it can F off. There is a bullish fair value. Market never closed below body. Even the fair value gap was not fair value gap was not violated by any means. Yeah, because if you look at that fair value, you're a candle which is below here. So far, it's not violated. Whatever. Maybe we can grid the range and we can see how, like where exactly that and how far. Whatever it. I said when it was going higher, pay very close attention to your chart, because if it is going for that 20,020.25, this level, this is my ultimate buy side target where the daily breakaway gap is. If it's going for this, it should not break any single quantity, even if it's a dollar. One tick worth of fair value. Literally one tick worth of fair value got broken. Did it took that high anymore? Why that high I'm talking about? 1, 2, 3 candle. Third candle high. Wherever this 3 candle created that. This inversion, this is the inversion itself. Okay, very small, I can think about it, but I will show you exactly. This inversion, that is your stop loss. The first move has. So yeah, once it closed below that fair value, this is how it looks. What is here? Look at that. Already done 2.22 R. Okay. A small, you didn't take it. Use the big one. This is where market has a fair value. This is where it has a fair value. From the high to the low, draw the OTZ. Even you can draw from this high as well, no problem. It's literally up to you. From this, the highest. That's your 6279 level. That's your overlapping fair value. So this entry, if you are not taking from here, this level can be the entry. Inside of that fair value at 62 level. Yeah, you can take little bit lower as well. Like lower means around this level as well. 1 to 2 is still delivered. Okay. How long you are not looking for buy long until this high is taken? Because that's the OTZ retracement high. Okay. When market broke it, how it broke or used that fair value? Below 50% traded. What I said already, that's a sign. Retraced higher, came back, took that low. That's it. Okay, this is the thing. If it was willing to go lower, either it could create more fair value gaps or it could use this fair value gap as your bearish continuation. It broke it. What is it using? And again, going higher or showing that that bearish fair value gap. How is it looking in terms of the body? Then that upper quadrant of that same bullish fair value. Okay, upper quadrant, mid area, low. Overlapping PD array. This is giving you confluence. What I'm showing over here or talking about is from this 25 until whatever it delivered. This is a 30 handle. A scalping, if anyone is looking for a scalp, this is a scalping. If anyone is looking for a scalp, then 25 handle, 25. Where is that one? Around, let's say you didn't get the entry over the market, got it. 31 handle. Closed below, went higher, came back. This candle again 25%. If you got your entry, use not. Think about it. First on, like this delivery, okay? This is one single candle, 27 handle, okay? Until this low. Or observe liquidity grab, market went higher, inversion fair value gap. You might be looking at a sell short using this inversion. That's okay. Fair value inverted, that loss, this move has mitigated. You don't have to be perfect until that level. See this, that inversion, or simple. This fair value gap with that volume imbalance. Even without it, it's also trading, but I'm just showing you just for the volume imbalance part, so that you don't miss, that you can use that part as well. Okay, so without volume imbalance, it's even more perfect. Okay, that tap, this trade, just for the sake of understanding here. Inside of a range, one fair value to observe, another fair value to observe. What I'm trying to say, or what I'm showing here, is if you know that what direction it can go and why it can go to that direction, what time, how, this sort of thing. See this 3 a.m. 3 p.m. This was the opening of the 3 p.m. candle. Opened, boom, immediately went higher. Anything similar with the previous hourly candle? 2 p.m. opened here, immediately went low. So what direction you are looking at? This is the manipulation happened. So what direction this market is going? Can you see anything here? 3 p.m. opened, immediately went higher. Yes. 3 p.m. opened, down close candle, traded 25% or 50% of this fair value, or even a up close candle, but a bigger, traded this fair values 25, 50. Then market went higher, I would be okay. Because that's exactly what I want to see, that it's open, low, high, then close, wherever it closes. But it opened here. Again, this green candle is where it was 3 p.m. This green candle, this level is where the market opened at 3 p.m. hourly candle. When it opened here, look, not a single candle in this leg or before this happened, not a single candle traded below that level on more time. It's literally the candle that opened here, that candle. So when no candle traded below it, this move is already a manipulation. That's why I was saying, pay close attention. Any continuation broken, this market, because this manipulation I wanted to, and then from there it's falling. Then I will have a higher time frame point of interest. That's why. Anyway, thing is, showed you that a small one tick. Look at it. So I'm telling you, this is the reason why market should come lower again. Why you can, I'm not saying it because I'm seeing some down moves and I'm just marking like, okay, you could 30 handle, 20 handle. Remember, I called about this move before even this fair value gap was getting violated. Literally here I called about it. And I talked about it, how far you can hold your minimum. I said the high of the day will be taken out. Was that the high or this one? This one. The high of the day will be taken. Why that will think this, okay? Where the hell is that thing? Not this one. This is what? By side. Here is the other thing. See that by side? What is it? Exact equal high. That by side. That's why I prefer like this. My chart, my execution chart is messy. Why I keep it? Do you know? When that exact happen, I don't FOMO. I know what I'm looking at. When market taking one level and down, how this candle created a relative equal high over here. So it's taken this on. Look at that. Okay, but anyway. This candle taken all those. Okay, so I'm gonna remove. Now my line is looking like this. So here, at this stage, this is a swing high formed with this is a swing high formed, and this is the other high. So I know that it's a relative equal high. It will be taken. Now, do you know how my chart is looking? My execution. This is how it's looking. I don't need to mark anything in between, but if I want, this is already that trend line liquidity again forming. That high, this high, relatively equal high. Okay, what is this high? One more time. 4 hours time frame is easier to mark. That's why I'm going there. But I'm talking about inside of that 4 hour. I'm talking about this side. So if I go to that 1 minute or even 15 minutes, you can see now that buy side that I wrote, it's now overlapping with that one. So I know exactly what level I'm looking at. And that's your daily breakaway gap low. It's the same level. That's why it's not just a buy side. It's the imbalance is still remaining above this level. That's why. So equal highs, relative equal highs, next high. And if I look into that same leg on the 1 minute at data or not, but if I can find that, then I might mark more green lines, like where this market is, how far. I don't think it will give me that data. It's like too much to ask for. Oh man, this is just no. That's too hard. If I look into even the 15-minute will not show me anything. So I'm talking about this high and that. Okay, this level on the 15 minutes. In the 15 minutes, come on. Can I get anything? Okay, here I go. This is how your 15 minutes looking. Okay, do you know how far I'm expecting? At least this fair value gap. And this is exactly sitting at the midpoint of your daily breakaway. So let me this is that fair value. I might fix it, but anyway. My chart will look from now on something like this. Two buy sides, and that's the fair value gap. On the right side, this is the next buy side. So this one I don't even need. That trend line I have already. So this is the buy side, that's a buy side. Just to make sure that I'm not FOMO exiting at any other level, okay? Or looking for a trade at any other level until market reaches for these levels. So now your buy side is looking like this. Yeah, and that's the 15-minute fair value gap. I can fix this fair value gap and keep it for tomorrow. 15-minute FVG, because I have more above that, but this one is more significant to me. I'll show you, don't worry. I'll show you that as well, why it's significant. This is a 15-minute fair value gap inside of a hourly fair value sitting here, right here. Hourly fair value gap with that 15 minutes, you know what level, buy side, above that buy side fair value. Overlapping with hourly, overlapping in 4 hours, above that buy side, this was that buy side. Overlapping in that daily breakaway, and this is that buy side again. 22,020.25. Okay, so 22,020.2. I'm talking about this. It's the same level. And this is where the 15 minutes is. Now let me show you how it looks from the daily perspective. We know we have 4 hours and hourly and other fair value. Here we go back to the 15 minutes. See that? CE with that fair value. Hourly. That same daily fair value gap. This is the unfilled portion. This is that overlapping with the CE fair value. 4 hours. This is the daily, but 4 hour is like this big. And from here until there, it's unfilled. But since daily is a higher time frame than for, I'm willing to see how this portion of the fair value is working. The day it closes, okay? The day it closes above fair value's midpoint. That's it for me. Yeah, what I will do from now on, I will keep a grid level for this fair value. This is gonna tell me a very good, because in 1 minute, this is what gonna give me the best 1 minute bullish fair value gaps. Even 15 minute can have the same thing. See that? 7.5 overlapping 15-minute bearish fair value. That's all. Anyway, I hope you got the idea. The thing is, whenever you are looking at a direction, always look into the continuation. As long as the expected, that's where you are not changing your direction. You are waiting for your setup. If you get your setup, you participate, like anticipate, participate. That's it. That New York first presented gap, that BPR, yeah, midpoint. This is why the midpoint is so important. Midpoint broken, use that, went higher. This fair value midpoint broken, came back, took that sell side one more time, then market went. And when it went closed above that fair value one more time, nothing closed below the midpoint one more time, not even the 25, nothing closed below that. Here, midpoint 25%, first 25%, then here again, then finally broke or closed below that mid. Here, here, closed above mid, came back, upper portion, upper quadrant, boom. here, closed above mid, very next candle. This was a down close candle with a long wick. This is a close candle with a long wick, a small body, the same level, same type. Then the upper quadrant higher. This one first it didn't trade, but when it traded, it already has shifted the market, you violating that fair value, whichever one you are market. So didn't quite deliver the way it was supposed to deliver. And reason I already explained, that hourly open, this was the high. Then the low formed like this, then market closed around this, or wherever the four closed. So this is where it closed. Opened here, closed here. So it's a long, like from here to here is your hourly candles. From here to here is your hourly candles body, and from here to here is your upper wick of the hourly. So 27.25 handle is the upper wick of the hourly candle. The whole body of the hourly candle, 3 p.m. candle, is 16.25 handle, and your hourly candles lower wick is 38 handles. Now you can verify with your hourly. Okay. Hourly, that candle, 38 handle on the low, exact 38, the 27.25 on the top, and I think 17 or 18.50 something we marked. So 16.25, that's 16.25. That's how your hourly candle looks. That hourly candle, 3 p.m. hourly candle. Opened at 3, closed at 4. Body, week. I don't need higher time frame to know where the higher time frame gaps are in the continuation, the one that I'm looking at. For that chart, I don't need it. I only need higher time frame data, because like it's gonna be very hard to manually calculate it. That's why I keep the higher time frame. But on my execution, it's only 1 minute. Nothing else. On the other, like the first monitor I shared, only 1 minute. Because I always look into the time first, then the delivery. Here, 11 a.m. That fall. This is the 11 a.m. Opened here, straight away went higher. What happened? Where it closed, I don't care, bro. I care about if I'm looking for any bearish move, or even like I'm bullish, right? So if I'm looking for a bullish move, I want to see this market is first coming lower, then it went higher fast. Literally opened and immediately higher move. What is that next move? Then that 10 as well. 10, I had a little bit of doubt. Okay, that's why I was still looking for until this buy side. The doubt is when 10 opened, it created a smaller wick on the bottom. Okay, let me show you that. This is the 10 a.m. Opened, went higher, then came back. This coming back below that opening price. This portion was giving me the hope for this buy side liquidity. Fair value formed. Any of that area can be the entry, but unfortunately, every time it was going high, it was not going for that level. By the way, this high was sitting exactly at that hourly BPR 50%, and this is happening at 25. Even this body where it closed here, like closing here, but this opening as well, any of these bodies, this is the exact 25% of that hourly BPR. Want to see? hourly bullish fair value, overlapping bearish fair value from here to here. What is that here? Exact 50%. This is the 10. Remember this is the 10. This was the 10 AM fair value. And this was your 10 AM opening price. 25 rejecting while taking some liquidity. Even here as well, took some liquidity. Finally, one candle closed above 25, came below that 50%, that low of that BPR. Okay, that's how the confluences are added. BPR above 50, overlapping fair value, all these levels. Yeah, came back below 50, closed. Going higher. At 50, you are seeing, at lower quadrant, you are seeing, even here as well, here as well. Observe this part, observe this part. Closed above 50 with this candle. This is the first time it closed above 50. Traded that 50 level. This is the move. Came back. How far? That hourly BPR range. How far? Yeah, it can go for the 7.25750, whatever. It can go there as well. But rejection or reaction for a specific reason. That's why I'm saying, like, anyway, stick with one PDRA, master it. You know how to take the buy long sell short. It's like just pressing the button. Only thing you have to know is your PDRA. The other thing you have to know is how many lots or contracts you are going to take. Yeah, be like how much risk you are going to take. That's it. That's literally it. Okay. Buy sell button. 82 PDRs. ICT has 82 PDRs. If it's 82, every move has something for it. Every candle has something for it. This long wick, the lowest body to the wick is your rejection block. Traded rejection block, went higher. That is already an entry. See this liquidity that it has taken? This liquidity until this is your box setup, unicorn. Once market close back above this liquidity level, it uses that level to go. That's the entry. See that? Was I looking at it before? This is the first time I looked at it. That's how it works. So entry, again, it's just the press of the button. It's nothing. You need to manage the risk and you need to know your PDRA. That's it. This is a box setup, okay? This setup is called box setup. This, once it takes liquidity and close back above that liquidity level, that's when that area has some meaning. That level has some meaning. Let me check on the other side. So I'm looking at a liquidity grab and then lower run, then finally market closing above that liquidity. Okay. So a liquidity grab, a lower run. Oh, sorry. Liquidity grab. Just a sec. Liquidity box. Okay. Liquidity grabbed, close back below. I'm talking about this to this. Maybe I can mark this high actually, because that's the highest high over there. That will give you even more precision, right? Liquidity grabbed, closed back below this range. Where was it tapping and coming lower, going lower? Buy side liquidity taken, close below the buy side liquidity. Sell side liquidity taken, closed the sell side using that. Now look, that's why I'm saying PDRA 82 of them again and again. Yeah, you need to know your, this is the box setup or whatever. I don't give a, this is that. This is that. For this, let's see. Anyway, guys, it's already almost 8 a.m. in the morning. I need to finish here. So good night.
Thank you very much, bro. Thank you. That's really good. Thank you.
How's that?
Oh, yeah. Tomorrow morning is all about box setups.
Oh, no, no, no. No, 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 no. Tomorrow it's all about the fair value gaps. Yeah. All about the fair value gaps.
All about
No
the
box setups.
Thank you so much. Thank you.
Okay, no worries. But you
Thank
know what you are looking at. So this information can help you. FOMO, you know, some
Yeah,
FOMO.
yeah.
Or at
I'll
least it will give you some idea about where the market is now finding support resistance, those type of ideas. So whatever it is, it will do that.
half of the day today I was sharing my screen with a FOMO block.
Fib anchor 0 to 100 on daily. Fib anchor, WeChat, are you still here? Let me check. W to check out. Let me check. Yeah, you are still here. So Fib anchor on the daily 0 to 100. You're talking about this one? Like from this to this? This is your daily chart. Or if you're looking at something like the projected terminus. So from the weekly, I have, okay. You had terminus marked. Okay. So the terminus, okay. So that to the high. Let me first find like mark the terminus on that this chart as well. I just do it on the both side, that's why. Let me. So the body to body of the initial consolidation and from, so this is where the first close proximate alignment is what I look. So this area, that's where it happened. I just put like if it's a close proximate alignment, I use middle point of those alignments. So this is that level. Now, if you are looking at this projected terminus, then maybe let me make it little bigger, white, right. Oh, sorry. Should not be like this. It is okay. Projected terminus, just making it like this, and let me make sure that it's visible on the daily. Okay. Now on the daily, so from the lowest point of that market maker model, okay, how that lowest point came in, that one also. So no, let's just so shell consolidation low to high, body to body. This is where, yeah, same thing around the middle point, and that's how I got it. Why I didn't mark this on this level? Look on the left, you will find your answer. Here on the left, nothing. Here it's right above a liquidity, but right below this liquidity, here, no fair value gap. I'm talking about imbalances. So at the first imbalance, here to here, unfilled, and mostly hourly, monthly. This is the weekly chart, monthly, but this is where you have the first imbalance started. This is how with that imbalance. So since that is where my imbalance, this level to this level is a big range. So I'm looking for the next range. And this range perfectly overlapping with this imbalance and the imbalance lower as well. Okay, so it's like literally overlapping, and that's exactly where this market. That's why. So that's how I cancel out some earlier ones. Okay, and you have the monthly as well. Weekly accumulation manipulation. I will look at the monthly higher time frame than the time frame I'm framing. So I'm looking always for the higher time frame PDF for my reversal point. Anyway, so from this low to this high, you can do a fib like this way. Okay. So this is that area, or like either way you are doing it, from the low to high or terminus, or from the projected terminus to that low, however you are doing it. 25%, 50%, 75%, 100%. Now on the daily, this is how it looks. 25 overlapping, inversion fair value gap, order block still overlapping that thing. 75% fair value gap, traded back into the fair value, went higher. Sorry, 50% is what I was saying over there. And this is your daily, currently looking at this area. We had a fair value here. That fair value one candle closed below, very next candle closed above. So maybe after trading here, it can come for this fair value retest. No problem. Using it as a reclaim, like the way it used this fair value as a reclaim, that way. This history can repeat. So that history is also repeating around this. Right? And looking for this as the initial target and then that. So you can either keep this grid level, or if that projected terminus and don't look for that too far ahead of it, then look for until this far. This is your buy side initial consolidation, then the projected terminus. So if you're looking at that, this is that overlapping fair value here or here. Perfect. 25% overlapping PDRA, this fair value. Okay, so that way. Either way you keep it, it's okay. It's not a bad thing that you are doing over. I'm doing it this way because I have done so many times that my projected terminus is like most of the time to the tick. So I'm happy to keep it like this. And again, observe this one. See this fair value gap include ICT included this balance. So I'm gonna include that as well. Look at the grid. Just one sec. Let me hide it on the daily for a second. 75%, 50%, 50% top fair value closing above that fair value gap grid level until this candle. So this is where I already counted it as an inversion. Yeah, I would love to put it like this. And it's the same scenario. High rejection, again, this is the higher area or high candle as well, because until this day, every other candle was failing to close above the midpoint. When this day closed above, this is how it looks. So I don't know why ICT choose to go for these levels like this way. Sometimes to be very, like to the tick, he will mark it like this. On his video, I saw it, but anyway, it doesn't matter. I would rather mark like this part. So this is the first candle closed above the mid. Now you are looking at this. Already today is finished, right? Today closed. Where did it close? Above the And by the way, if it had to go lower, that was a very good rejection. Look, this big of a bearish fair versus this small of a bullish fair value gap. That fall stopped by that. Next day, using that same fair value, market closed above. Next day, opened here, closed here. And then you are looking at price right now here. When market is extreme bullish, it will keep breaking your bearish, your bullish period. Here, yes, I didn't like it. If it didn't happen like this, I would make like on this day. That the entry I framed on Asia session, it was literally here. And it was a one-sided delivery. But you know what I had to do? Right at this level, I had to close my entry. This is Monday, okay? This week's Monday. Just because this fair value gap got closed below or violated, it could have used it as an inversion. So the entry I took, it was literally from that. I will show you. Anyway, from here, I had to finish my day at this level. And after it closed above, the next session is where I set up. This day, it's not a big day, but look at I'm like, I think 3,400 or something. 4,000 and 5,000 I made on this day. On my 50k 4,000, all other 150k 5,000. Yeah. Bear is getting broken, a smaller bull is getting respected. This one, I didn't like it. Yeah, since it closed the very next day above the fair, fake can happen only once. Like here, fake can happen only once. Very next, reclaimed it, went higher. Closed above, went higher. Maybe, after trading here, it can come for this type of bullish fair value gaps. Not a small, but I'm expecting a clean, bigger one. If that happens, good. If it keeps going like this way, I'm happy because I'm looking at all-time high. I'm not thinking this market will reverse again. Because by now, by these candles closing, it has already closed about monthly already candle. Daily thousands of bearish value got inverted. One here, 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 here. Yeah. So broken, whatever. A small one. Broken. There is a small one in between, but I'm just gonna make it short. Broken. Yeah. Now this one, same thing. Today, broken. This is how many bearish it has broken. And forget all the bearish order blocks. All got missed. Okay. So this market is not bearish. This is how many bearish fair value it has broken. So, and not a single bullish fair value gap got broken the way it broke the bearish one. Yeah. This one, a little bit of mess up. Yes, there is a small volume imbalance and try to make my, I don't want to be that guy. I want to say it this way. One day closed below, very next day closed above. Look here, okay? One day closed above, three of those bearish fair value gaps. Very next day, this fair value got closed below, this fair value got closed below with this candle, but this on this candle. So what it did, using this area, went for that fair value, came back. Finally, what are you looking at here? That bearish fair value gap, including volume, broken, right? Closed above mid, went through. If you are looking from here to here and excluding the volume imbalance PDRA, upper at PDRA, closed above, reused it, boom. And by the meantime, all those bullish. Yeah. And now here. So whatever it is, this is what I'm looking for. Is this might be revisited after trading this, and not just this, around that 50%. That's what I'm looking at. This might be revisited, and the revisit reason 4 hours fair value. So far, this 4-hour fair value is still your continuation on 4, because there is no other bullish 4-hour fair value form. So this is your bullish continuation. That is what I'm gonna keep an eye. But this area overlapping with this continuation, 4 hours breakaway gap, while clearing this liquid time, trading into that reclaimed on after here. So I'm looking for something like this from here, trading this area, coming back to either this 4-hour fair value, but best case of scenario on the higher time frame, like 4 hours or daily chart, it's trading here, but a week is coming here, body is staying around this. That will be the best. Like after trading from there to here, the body is on the same day, body is closing here, and from this again this move. And since my liquidity is now at or above the 50%, this move gonna break that 50% and close above that, as what I showed the whole time. The moment it does that, this is what I'm looking at until that all-time high. Okay. So let's see. Remember, okay, I'm expecting a liquidity around that 50% level, a revisit to this level, then closing above 50, or even the fair value on that the day it reaching for this liquidity, whatever the liquidity it creates, that day it should close above either the mid or that fair value as well. Like however it closes, that gonna tell us from here this one. Okay, so keep a screenshot of this and come back after that happens. This is like 4 years worth of sleepless night. Okay. I will remember how many people saw that. Shub saw that, Cesar saw that, Morse saw that, Creek saw that, Epi saw that, Chengi, Ali, yeah, me. Then we chat, we check out or something. Okay, check out, I guess the short. Then Garmit, yeah, my brother. I will remember these names. I will remember these names. Because you guys are my certificate of that. I'm calling it out before it's happening. I called it out literally on this low as well. Oh, sorry, not that. It's a 4 hour chart. This low. That this is it. Now this market is going higher, back again for the all-time high. Whoever was there, they knows. Whoever joined later, they might have seen me talking about the same thing around this. So well, study and mark my own. That's my way to learn. Yeah, exactly. The way to learn, bro. That's exactly the way to learn. New day started. Where is it going? Let's see. Okay, this is a very bad low. Okay, don't think this is the low of the day. At least I'm not thinking about it. This candle that started the market, low cannot be that candle. Usually that gap. So this low should be taken out. Now or later, I don't know, it should. Okay? The candle that creates the high or low. For example, Monday had something like that. Let me show you the Monday actually. Daily. Let me mark it from day. Okay. Not session. Where is the session line? Oh, I'm on the daily. That's why it's not showing the session line. No worries. I'm gonna go for the 1 minute and mark this session breaker. So this is today. This is Tuesday, right? This is Monday. Here. See this Monday candle opened. That same candle created the high. That's why I was saying when market was going higher, that high will be taken out. This is still Monday. Okay, from this yellow to that high. This is Tuesday. The way it created, it didn't even create any low. So came lower below that opening price, this level, then shoot higher, then finally it again closed like this way. It's Tuesday was a small green candle. Remember side, like yes, not. I'm forgetting what day it is. Today is Wednesday. Yeah, so Tuesday. A small green candle. Monday, Tuesday. And today we are looking at the similar sign, which is this low cannot be the low of the day. When the low of the day, it's like a daily candle. Okay, so you are expecting, if you are bullish, you are expecting open, low, high, then wherever it closes. If you are bullish. So until that low forms, nothing. And don't even try, okay? Before 8 p.m., if you even try, you are going to get forked. Your Asia session starts at 8 p.m. So this is how far you cannot. Let me mark it as a macro. So this is where the Asia starts. And that's where the kill zone starts. From here, you are looking at your trades if you are Asia trade. Before that, let it do whatever. Best thing that happens during Asia 9 a.m. 9 p.m. to 9:30. This can be the Asia silver bullet window. I'm not sure, but within this range, this market usually takes some equal highs, then goes for some equal lows. It can be these lows or some lows around these areas, like this. Or opposite is true for the bullish one as well. The sad part is that this liquidity, Asia will take it. That level, okay? Not just this, that one. That's the sad part. Like yesterday, when I was saying the Friday high should be taken as well, market went very close to that high, but couldn't take it. So Asia did the job earlier, Friday high. Are you serious? Congratulations on your payout. Are you fucking serious? This mail I'm receiving now from Top Step. Oh, Top Step. This cannot be true, man. On Friday, it told me that it has already removed the fund from my account and the fund has been processed already on Friday. On Wednesday, they are sending me the mail of congratulations, we have been processing your payout. Then why it showed me on Friday? The 16th May, I requested it. $5,000, but like $20 charge for the international transaction, or I don't know, whatever it is. Same, I get the same. Submitted on Friday morning. Okay, this is 8:46 p.m. So Asia time, Friday. Fund removed 8:46. Approved at same day. Okay, Friday. 11:55. Then can I move? Same 17th May. Compliance approved, risk approved, finance processing. The same 17th May. Is that fund sent? And I still didn't receive that payout. And today, Wednesday, they are telling me the congratulations mail. Fuck, man, I shouldn't have even joined this live dashboard. Because on the other one, it was taking only one day. I request on Wednesday morning around 10 a.m. Australian time. On Thursday afternoon, like 1 p.m., 2 p.m. Australian time, I used to get my money in my bank account. But ever since I joined this live dashboard, it's like every payout I'm requesting on Friday because payout cycle has messed up like that. Like I before I used to pay out request on Wednesday or Tuesday morning, but it's now on Friday, the cycle, and they are sending me on Thursday. Every payout I have requested on. Anyway, I'm gonna. The problem is I cannot request the other payout because if I request another one, they might combine these two and then make an hold or waiting. I don't want to wait for both of my payouts. It's taking a week to get into my bank account. So I don't want this payout to wait for another week and then that can happen. I'm not sure, but I'm thinking about it. Now this is making me mad, bro, because I need to request payout from this 50K account today. Otherwise, this on cycle is also fucked up. $5,000 payout. I'm willing to request from this on today. Otherwise, my cycle is already fucked. Yesterday, I didn't do it because I was thinking today I'll be receiving. Like 5 accounts, I do it that way. Like one day, one account. Yeah, bro, catch you tomorrow. Good night. You have been calling all time high since first daily FBZ got inverted. Arish, exactly. Exactly. Yeah. My cat. What happened? He had a good sleep. Okay, need to go outside maybe for a walk. Go. It's time for me to get sleep. So you go out.